2018 has been a milestone year for mergers and acquisitions in India, with the highest ever deals at $92.2 billion, up a whopping 98% from $46.5 billion in 2017. Now, the year's also seen a significant number of big-ticket transactions. 5 deals over $5 billion compared to only 1 last year. This is in fact the highest that we've seen in the last 5 years. Walmart's acquisition of a 77% stake in Flipkart for $16 billion in May of 2018 was the largest ever M&A transaction in India and the biggest Asia-Pacific retail M&A on record. Deal Street was cheered by the recently implemented insolvency and bankruptcy code and an extremely competitive environment on the domestic front. In fact, domestic transactions constituted the biggest segment this year at $41.7 billion. Now, let's take a look at the cross-border business. There was a sharp uptick in inbound deals from $7 billion in 2017 to $37 billion in 2018. On the outbound front, we saw a 6-fold increase in transaction value from $2.4 billion in 2017 to $13.5 billion in 2018. What about the private equity universe? Well, 2018 has been its best year yet in India in terms of both investments and exits. So, given this backdrop, what can we expect going forward in 2019? Will the deal momentum continue? And what could be some of the key roadblocks or challenges? Those are some of the questions we will try to find answers to. Good evening. Thanks for joining us on Eye on India. I'm Shereen Bhan. On the show today, Shweta Jalan, Managing Director, Advent International. Also with me, Puneet Dalmia, Managing Director of the Dalmia Bharat Group. And Ajay Arora, Partner and National Leader, Investment Banking Advisory, EY India. Shweta and gentlemen, appreciate you joining us here on the show. Ajay, let me start by asking you, what do you make of the kind of M&A action we've seen in India so far? And the big question, is this here to stay?
Yes, I think this was a milestone year for the overall deal activity on the street. I mean, you probably saw, biggest transactions happening driven by the IBC, process getting more and more clear. You probably saw about $15 billion plus of IBC transactions getting concluded or close to conclusion in the current year. Inbound picked up in a big way. Flipkart was obviously the biggest one. However, I think you saw deals across sectors in the inbound space, largely in technology. You saw deals in steel. You saw deals to some extent on the consumer side. So I think overall we saw probably the momentum which we've not seen for the last few years. The trigger largely was, the overall confidence on the Indian economy. I think we also probably had a year where, some of the hiccups we saw over the last 2 years due to either GST or demonetization, I think those were largely, we crossed the bridge on those issues. And just the overall level of confidence of the entrepreneurs or the global buyers looking at India, really gave the impetus to the deal market in India this year.
Well, that clearly seems to have been borne out by the numbers. But Puneet, let me pick up on the IBC point which Ajay just talked about. And we saw a very hotly contested battle for Binani, and you were a part of that. Eventually didn't go your way, so better luck next time. But how significant a trigger has the IBC been to drive the M&A value?
I think it has been pretty phenomenal. First of all, there is absolute clarity that once a company gets admitted into IBC, either it will get liquidated or get sold. So the certainty of transaction is very, very high. And the fact that it's a lender-driven process and a quasi-judicial process also gives people a lot of confidence that even though there might be some delays, which we had in multiple cases, but the transactions are going to happen. And I think lastly, the most important thing was that when you are going into a company, the liability stack sometimes is very uncertain. There are contingent liabilities, there are unknowns. In this, the liability stack is very clearly defined, and you are not likely to get hit by surprises post the transaction. So I think there was a lot of excitement because of this, and for domestic buyers, it was consolidation which was a driving theme. And for many of the global buyers, especially in steel, it's like a great entry strategy. Because it's very difficult and long-term to build these plants, and it takes a long time, very expensive. But somebody has done work for like 10, 20 years, and you can get in, maybe at a slight premium because it's a competitive process. But if somebody is willing to take a long-term view, I think a consolidation opportunity or an entry opportunity is something very exciting. And in most industrial businesses where we saw intense competition, India's story is a well-accepted story. And I think ex-China, this is the only market which has size and growth. And that's why people really wanted to take positions here with a long-term view in mind.
That was the trigger that Ajay was talking about. But let me continue the course on IBC. Has the Binani transaction whet your appetite? Are you going to be in the market looking for other distressed assets?
I think, we looked at all the 3 cement assets which were in play. And, out of that, one is concluded, one is still in process, one we lost. So right now we are doing a, big expansion in East. So our capacity by end of 2019 calendar is likely to be around 37 million tons. So we are adding from 25 to 37, we are adding almost 50% of our existing installed base as new capacity, including organic and inorganic. So I think for now, we are going to focus on execution. But having said that, if something interesting comes up, we've looked at all transactions, and we'll continue to look at all transactions. If something interesting comes up and we think it's, something that fits with our strategy and the pricing is right, I think we'll not hesitate to look at it.
Okay, I'll get to valuations in just a second, but Shweta, let me ask you, the point that Puneet just made here, that it's perhaps easier in India to do brownfield as opposed to setting up capacity, fresh capacity, and that seems to be one of the drivers, at least when we look at consolidation, at least when we look at foreign players making an entry into India. How much of that is a trigger, and how much of that will continue to drive M&A going forward?
That certainly is, a big trigger, and specifically in industries like cement, where building has a very, very long gestation period, opposed to buying brownfield assets, right? And that speed to market, that availability of either limestone mines and other acquisition of land, which otherwise can take a very, very long period of time, does get cut. The time period does get cut very substantially in a brownfield acquisition or brownfield expansion as opposed to greenfield acquisition. And that will continue to drive drive M&A activity in India in sectors like cement, steel, where despite all the ease of doing business that we talk about, there is a time period that you cannot avoid in actually building ground up.
You're absolutely right. But Ajay, let me come back to you, and we're talking about inbound transactions, inbound deals. One of the recent transactions, and I'm talking about IHH and Fortis Healthcare, is that going to lead to some kind of uncertainty as far as foreign investors are concerned, given the fact that, these things may be challenged in courts, there may be legal impediments? Could this lead to some sort of a souring of sentiment, for instance?
Not really. I feel that some of these experiences that we've had in the current calendar year, where whether it's related to the Fortis transaction or some of the IBC-driven transactions, I think, a lot of these experiences are setting precedents. And you're clearly seeing, whether it's the court or whether it's the NCLT, taking views which are then setting a good, positive, ground rules for the future transactions. So not really. I think clearly if someone has to really look at India from a long-term standpoint, I think these are some of the hiccups that probably will come along the way. But clearly I think some of these hiccups are also important because they just tend to, iron out some of the issues which we have seen historically in some of the transactions. And, they get more and more streamlined as we move forward. So overall, maybe a little bit of impact in the sentiment, but not really in terms of a long-term standpoint.
Okay, so no long-term impact on account of that. But Puneet, let me ask you about the appetite for Indian companies and Indian promoters to actually look outside. You've just done a small transaction, as you were pointing out to me before we started the show. Is that likely to be something that you see a lot more of in 2018, or will inbound continue to drive the action?
I think, my view on this is that if you look at global deals that Indian companies have done, like Chorus was done by Tata Steel or Novelis was done by Aditya Birla Group, I think the experience of Indian entrepreneurs has been that it takes a long time in terms of payback, and it also requires a significant commitment of financial as well as management resources to play a particular market.
And getting the commodity cycle right.
And getting the cycle right, of course. So timing, of course, is very important. But I think the amount of commitment required to create a strong position in a market is often underestimated by strategics. And, you know, I think only if you have a very strong domestic position, which can give you, you know, predictable cash flows and growing cash flows, only then people will have the, you know, appetite to do big deals outside and make them a success. So I would say that as of now, the confidence in India is growing. There is huge growth here, and foreign investors are coming here. So the competitive intensity is also increasing. I think as of now, my feeling is that Indian entrepreneurs will secure their domestic positions and consolidate this market further, because most of the growth is here, and because there's higher multiples also here. You know, so my personal view is domestic M&A is going to continue to be the flavor of the year next year, as opposed to outbound. And also, I think distress M&A, the you know, first few deals were hotly contested, and it's like maybe, you know, 10-15 transactions which have happened, but there are still a, you know, huge amount of asset pool in the mid market, which is in our estimate around $50 billion plus in about 150-200 companies, which also have serious scale. And I think that itself will offer an enormous opportunity for people, you know, to do bargain buying, and for people who are cash rich and have good credibility, have access to great financing. So I think even distress will be an area which will attract a lot of attention. And if 2018 was the year of steel and cement, I think 2019 will be the year of real estate and power.
Real estate and power, a sector that's been sort of beaten down completely, at least over the last few years. You expect a rebound as far as real estate activity is concerned?
A lot of deals will happen. I think there's a lot of power deals which are stuck. There are a lot of real estate deals which are stuck. And I think investors will find huge value here. So I think once the elections are over in 2019, maybe some people are waiting for a little bit more clarity in terms of which direction the country will head in. And I think there will be a lot of appetite to you know, play power in real estate.
Okay, Ajay, would you agree with that, that the two sectors to watch out for in 2019 could be real estate and power, if 2018 belonged to cement and steel?
Yeah, I think from a distress standpoint, I agree. Power, there are a lot of assets that are going to get, you know, auctioned out this year through processes, and I think some of them would see deal closures. But I think overall, other than distress, I think we'll continue to see outbound in sectors like, you know, pharma. We saw a bunch of deals this year. We'll probably continue to see that. We will see outbound in technology. We saw the recent HCL transaction which was announced. We'll probably continue to see outbound in auto components. So outbound will be selective, but I agree with Puneet there. It will be a lot more cautious. However, I think the inbound momentum will probably, you know, may get impacted to some extent with the election overhang. Could be a short-term blip, but I think big ticket inbound would probably get impacted closer to the elections. But I think it should pick up again, given the you know, the structural reforms that have happened in India, you know, the overall economic growth being there, and the momentum continuing from an economy standpoint.
Okay, so inbound expected to be the driver in 2019, and cautious optimism when it comes to outbound in 2019 in select sectors. But Shweta, you know, let's talk about exits, and private equity especially has also had a great year, perhaps its best year in India in 2018. There has been some concern, though, that the market regulator SEBI has raised with respect to the IPO pipeline. What's your take on both private equity as well as IPOs?
I mean, it was a fantastic year for private equity in terms of exits, and that was obviously largely driven by the fact that there were very, very buoyant IPO markets, which, you know, for the industry is very good, because, you know, we've been pretty infamous, I would say, for many years that India, you just don't see enough exits and you haven't seen enough returns. And I think that over the last, I would say, not only this year, but I would say last 18 months has changed substantially. So I think that has given people a lot of confidence in the Indian private equity industry, which is very positive. I think the market regulator concerns are also fair to some extent, because many companies are really going public much earlier in their life cycle than they should. So as always in very buoyant capital markets, pretty much everything goes because sentiment is really positive and everybody thinks that they can list and they can, make merry out of those high valuations, and that's not good for the long term. Because what happens is when these small to mid-cap companies list, they have low liquidity. So frankly, you've made some initial money, but eventually the exit beyond that through blocks or otherwise becomes equally tough. So I think I would say, we need to be more cautious in the industry when we're looking at IPOing companies. But obviously, at the same time, you have to make, a use of good momentum in the markets, given that most of the private equity industry was sitting on pretty large portfolio, such good exit momentum in a while.
On that note, we'll take a short break, but keep watching CNBC-TV18 Eye on India. We're discussing the M&A roadmap for 2019. Welcome back. You're watching CNBC-TV18 Eye on India. We're discussing the M&A roadmap for 2019. In specific, if consumption will continue to be the key driver for growth in India over the next few years, and that has been the driver of growth, investment yet to really pick up. What is the sort of, is it a sector agnostic approach that you expect private equity to take and hope that growth will sort of drive every boat, or is it going to be in specific pockets?
No, I think that's the consumption theme is something that we in Advent also have, if you look across our portfolio, have really focused on. So I think just much like Puneet and Ajay earlier articulated, I think there's a lot of growth in India driven a lot by domestic consumption, and I think a lot of the themes that you'll see around investing, whether it is investing in the consumer goods industry or in healthcare or even in financial services, in many ways sort of plays a domestic growth and domestic consumption. And I think that theme is, most likely going to continue, I believe, in the year that's coming forward as well, 2019. I think in addition to that, you will see some momentum, I feel, in the industrial sector, which has not, seen much love, I would say, from the industry, private equity industry over the last couple of years. I think you're seeing some early signs in terms of deal activity picking up on the industrial side as well. So I do feel, and that's necessary also from the overall economic growth standpoint. So I do think that you will see some good early momentum there. I don't necessarily think that there'll be, like Puneet said, that much activity on the power investing side, and that sector still has, some, strong headwinds.
A lot of challenges.
I do see a lot of challenges there. So I think that's a little bit a while away, but overall, I think you would see some activity on the industrial sector as well.
Okay, so pick up in industrial activity, and that could also lead to some deal momentum in 2019. But let's talk about the challenges, Puneet. And I was having an interesting conversation, almost a deja vu actually, of the kind of problems that the startup universe is faced with, especially when it comes to the angel tax and the treatment that the income tax department has decided to bestow on them. That apart, what is the kind of concerns that you might have that could slow the pace down for M&A in 2019?
I think, one point definitely is that, again, it depends on what you're looking at. If I specifically focus on distress for the moment, I think there are some issues which require clarity. And I think the law is still evolving.
What, 29A in specific?
For example, 29A, who can bid, who cannot bid. And I think they are being proactive in resolving it. But there is another issue in terms of who can vote, who cannot vote. So now there is one more issue that Supreme Court has recently ruled, that operational creditors also...
It hasn't been a ruling yet. It's only an observation, not a ruling yet.
But I think when Supreme Court says something, people take it very seriously. So I agree it's not a final law, but I think this is something which will be hotly debated as to who has a voice, because many M&As were getting dragged, or the resolution was getting dragged, because too many people were trying to optimize things. And I was on a panel yesterday where Kaushik Chatterjee of Tata Steel, he made a great statement. He said that, look, it is distress cases like house on fire. So you have to call the fire brigade, and when the fire brigade comes, you don't have too much time to sort out everything. The only job is to quench the fire. So the priority has to be quick resolution rather than wait for the house to burn down and sort too many things out. So I think there are laws which need clarity. For example, I'll give you one more example. In one of the resolutions that we have filed, there is a case that this company was facing a winding up petition before the IBC process started. Now the question is, should winding up take precedence or should IBC take precedence? And IBC process is concluded. You know, so I think that's one issue which, as well,
but isn't it clear that IBC takes precedence over all other laws?
Yes, but it has to be decided by the courts, because ultimately the final law is what the courts interpret. There is a book, but the courts have to interpret that book. So I think it is still going through that process. It's a new law. So I think that causes delay and that causes, you know, some confusion. Secondly, in one more case, we are saying that, you know, the state government has to, you know, do a lot of things. So like, for example, in a cement business, if a mining lease has been cancelled, you know, in a resolution plan, we've written the mining lease has to be reinstated. There are some incentives which have to be reinstated, you know, and the state dues have to be treated in a manner which the resolution plan specifies. So the state government says, are we a signatory to this agreement or are we not a signatory to this agreement? You know, this was a banker and a, you know, buyer process. Yes, it's been approved by the court, but we are not a signatory to this agreement. So I think ultimately it will, you know, pass through, but it causes a debate, it causes delays. So I think in distressed situations, I think some delay will be caused by litigation and interpretation of the law. Some delay will be caused by, you know, things which are being solved for the first time and there is no precedence, and therefore you know, it might slow things down. But I think the government in this case has been extremely proactive. 2 amendments have come, etc. And I think they are even creating more capacity in courts to handle it. If I look at some of the other situations, I think these tax treatments are an issue which are you know, quite an ambiguous area. And you know, post acquisition you don't know whether you will have to pay tax, you will not have to pay tax. So I think in the tax area for large ticket acquisitions or large ticket deals, if there can be more clarity and less ambiguity, I think it will help the
How much of a challenge is that, Ajay? You know, this used to be a big issue in the past, issues with respect to withholding tax, for instance. Does this continue to be a prime concern when we're looking at M&A deals?
See, withholding tax became a big issue, and a lot of deals actually got stuck because of that also about 4 years back or 5 years back. 4 years back, I think, 4 or 5 years back. And, you know, things have, you know, clarity has emerged. I think now most of us, whether it's the bankers or whether it's the tax advisors, I think you tend to preempt some of these issues that are going to crop up later and try to have solutions in place. You know, whether it's insurance, whether it's, you know, taking other routes, etc., and, you know, having a package in place. So you're trying to do that more and more in transactions. I think we can't get away from the fact, which is very important, I'd like to highlight. If I just rewind last year, the year before that, I think deals are not only getting bigger, deals are getting a lot more complex. If you do a deep dive in every transaction, you know, the complexity levels have increased to a very high level. So the intensity of diligence required, the intensity of execution, I think it's just deals are getting larger. I think with the regulatory environment, the way it is, you know, a lot of listed company transactions are happening. You have new regulations coming in. You know, so overall, I think we are now looking at transactions which are bigger.
What about the governance risk? What about the governance risk? Has that gone up as well, Ajay?
I think from a governance standpoint, you know, we are now seeing examples where, you know, most of the governance piece is being taken care of. So I don't think governance risk has really gone up. I think the bankers, the advisors, you know, whole set of people, including the family and the buyer and the private equity investor, I think we're working more as a team. I think you are spending a lot more time on stitching the deal together. You are preempting a lot of questions that may come up later. You are, you know, deal cycles have become longer. So one of the key areas is, if you really look at some of the transactions, I think today a large transaction is minimum, I would say, we say 9 to 12 months, but it easily takes about a year. Plus or minus. So I think we need to just keep that in mind. Some of these areas do create, you know, a bit of, you know, rough edges on the transactions. But I think we need to factor them in and hopefully, you know, preempt some of these issues and then, you know, ink the transaction. So now you are not inking the transactions in a hurry. You want all the corners, all the edges sharpened up, and then you ink a transaction.
Well, transactions being stretched out, timelines being stretched out is probably good news, though, for consultants and lawyers who are working on these cases. But Shweta, you know, we talked about the factors that we'll have to deal with in 2019 when it comes to the domestic market, and the big one really are the elections, which should be over and done with by the first half of the year. But global factors that could act as triggers for the M&A pipeline in 2019.
I guess, you know, I mean, in many ways, M&A is very sentiment-driven, right? When sentiment is positive, you will see sort of higher momentum in M&A, and when sentiments are sort of down, or in any of these geographies, whether it is US, Europe, you obviously see lower M&A activity, right? So I think a lot of eyes are on US in terms of where that will land, and you've seen a very nice, you know, long, good run in the US, I think, and there is obviously some element of worry as you look to US and see that will there be any element of recession coming in sooner than later in the US. And I think something like that is, you know, bound to affect M&A, at least inbound and outbound M&A activity looking to the West, I think. So that definitely is a worry. And many other...
And interest rates moving up.
Yes, absolutely.
At least in the mother market like the US.
Yeah, absolutely. That is, you know, a big concern area as well. And for India, obviously, some, you know, crude prices, as we've seen, tends to have a lot of impact across, you know, overall macros of India, and that then tends to impact, and that's, you know, sort of one global commodity price, and that then tends to have a spiraling effect on everything in India. So that is also something to watch out for.
Yeah. Well, at this point, it's spiraling towards the positive, at least as far as crude prices are concerned, crashing down over 30% in a month's time. So that's yes, and the currency has, of course, appreciated quite significantly. Of course, a very volatile currency either way is not good news as far as transactions are concerned. So that has to be a much more calibrated move, one would imagine. But 2018, a good year for M&A, in fact, the best across several parameters, and the hope is that 2019 will continue the momentum where we've left off. Puneet Dalmia, Shweta and Ajay, appreciate you joining us with your take on the year that was and the year ahead for M&A. Thanks very much for joining us on Eye on India. From all of us here, goodbye and many thanks for watching.